Hello, friends. I'm Ray Latif, and you're tuned in to Taste Radio, the leading podcast for entrepreneurs, makers, and innovators in the food and beverage industry. Behind nearly every breakout CPG brand is an early believer willing to write the first check. In this episode, Adam Spriggs, a founding member of the early stage investor community, the Angel Group, and a general partner at its funding arm, Supernatural Ventures, shares how a casual investing experiment evolved into a 275-member syndicate backing the next generation of emerging brands. Along the way, the Angel Group has invested in standout companies including Painterland Sisters, Poppi, Siete, Goodles, Bachans, and Jesse and Ben's, a track record that underscores its eye for breakout potential. Adam breaks down how his team evaluates nearly 1,000 opportunities each year, why founder quality remains the ultimate differentiator, and what he means by backing brands that are both, quote, interesting and obvious, concepts that feel fresh yet inevitable in hindsight. He also discusses the firm's evolution from early stage signature checks to larger growth investments, how they support founders beyond capital, and why categories ranging from THC beverages to frozen potatoes and premium tortilla chips still hold significant untapped upside. Hey folks, it's Ray with Taste Radio. Right now I am supremely honored to be sitting down with Adam Spriggs, who is the founder of the Angel Group and a general partner with Supernatural Ventures. Adam, it's great to see you.
Pleasure to be here. I've listened to the program for going on almost a decade now, followed your work, been to a lot of the company's events, and always felt that the stuff you do is top notch. I feel like I'm sitting with the Guy Raz of CPG. Have you ever been accused of that, Ray?
I've heard that before, and It's an honor, truly an honor, because he is the guy, so to speak. And I really appreciate your thoughts about BevNet and what we do here. Equally honored to be sitting down with you. I feel like the Angel Group has helped so many early stage brands get to a point where they have the funding they need to take that next step, get to that next level. And it's not easy, as you know, and as all of us know, to scale a CPG brand. And funding is so crucial, especially at that angel stage. So thank you for what you do.
Yeah, it's a pleasure. It's a joy to do it.
And you've also been a co-host for our Elevator Talk series, which profiles early stage and disruptive brands across food and beverage, and offering some feedback and advice to emerging brands. Have you stayed in touch with any of the brands that you may have interacted with on the show?
Yeah, there's a couple that I'll still, I'll see at trade shows and we catch up. There's a few that we still trade emails with. So yeah, I think it's a great program, and you guys do a tremendous amount for the early stage CPG community as well. So I feel like we just have a lot of shared interests.
Yeah. Well, we were upstairs just now and downstairs, and you've seen the breadth of new products that come to market, because we get new products, new brands coming into BevNet HQ on a daily basis. And I would say we probably see, 10 or 12 new food and beverage brands every single week. And that's just like the tip of the iceberg.
Yeah.
And it's difficult. It's really difficult to get awareness for what you're doing. There's a lot of stuff that can get lost in the clutter. I heard once from another investor that there's kind of a glut of brands that have come to market over the past 6 years. And one of the interesting things about this dynamic is that a lot of these brands in the past would have failed within the first 1 or 2 years. And the fact that there are more options for funding, there are more options for just route to market, direct to consumer or otherwise, that these brands are just slowly fading or slowly scaling, but you can't really tell which.
Yeah, there's a surplus of brands, and I think the industry is still catching up to just having the support systems in place to be able to touch more of these brands and try to impact their ability to sustain themselves, right? So you've got more co-manufacturers coming online. That's taken a while to get up and going, but you see that, the different incubators, accelerators, you get all the different fractional resources that are coming to market. And as you mentioned, funding, where we're still seeing a big gap is, a lot of the institutional investors, the venture funds have moved further upstream.
Right.
So we need more angel investors involved in this space. And you'll never be able to fund all these brands, and you wouldn't be able to fund all the brands that are really deserving of bringing in outside money to keep them going, but definitely making progress.
You've been involved in CPG for years now. I mean, well before the Angel Group. Just talk a bit about your background in the industry.
Yeah. So I started around 2005, post-college, went to work at a creative agency in Toledo, Ohio. That agency would evolve and become what is today Interact Brands. I know many of the people here at this office know Blake Mitchell and his crew there. I think considered to be probably the premier branding and design firm in the space. I got to know Blake's father out of college. He brought me in. I worked in business development there. We worked with a lot of regional family-owned food manufacturers that were kind of in the Rust Belt area, from Detroit to Toledo to Cleveland to, like Erie, Pennsylvania, and cut my teeth there, helping, brands bring new products to market, develop sales sheets, trade show booths, package design. So that's really what most of my career was wrapped into for the first, 15 years. And then about 7-8 years ago, I just started to get the itch to do some angel investing, just a personal interest. And I think part of it was reading, Nosh and BevNet articles about these brands who were getting funded and, these founders and these stakeholders, these investors who were taking these incredible journeys, brands were scaling, brands were exiting. And I can't lie, it was like a little bit of kind of FOMO I had, here's an industry that I know pretty well, but there's a whole kind of scene or side of the industry that I hadn't had much exposure to for most of my career in terms of just the investing landscape and how these businesses are financed. And so I wanted to get involved. And as I started to explore what angel investing could look like for me, I felt like I was a little bit in over my head, right? I think I felt like I could identify brands and products that I think the market would take to, but I didn't really know how to evaluate those businesses from the lens of like an actual investor, So I wanted to do that. And I felt like the best way to do it was just to start calling on my friends who worked in the industry, who worked in, for a brand, like the director of sales or VP of operations or CFOs, for these different companies who also had an interest in angel investing, but like me, maybe didn't have a lot of access to deals, maybe didn't feel quite competent to evaluate them for investment on their own. So I just started asking my friends to look at these deals with me. And we would, in the evening, we'd sample products in the evening hours. We would get on calls with these founders. And I wouldn't say that they would pitch to us, but we would just get to know them, as industry people. And so we would kind of explore and share deals together communally, and then we would individually make our investment decisions on whether or not we were going to invest. And we start writing, 10K checks, 15K checks. And that was really the genesis of what would become the Angel Group.
When you're saying you would invest or write $10,000, $15,000 checks, would you do it as a group or would each of you invest that amount of money into the brand?
Yeah, good question. So each of us would typically write, because the minimum check sizes for brands who are raising, especially like pre-seed, seed stage capital, it's going to be usually like 10, 20K. Mm-hmm. And so individually, we would write checks in that range. And collectively, when we first started, there's only, like 5 of my friends in the group. And then we would, have 5 more friends in the industry who would be like, I've got a little bit of money burning a hole in my pocket. And this is an industry I understand and have some influence in, And so I think that was kind of appealing for our friends in the industry to kind of join forces, look at these deals together. And so we might collectively, bring in 50K in the early days of the group or 75K for these brands who are raising money.
So you've grown quite a bit, the Angel Group, that is. It was 5 or so folks, and now you have how many people involved in the network?
It's about 275. So 275 people in this formalized network, and everybody has this passion to invest in food and beverage startups. And we operate much today like we did originally, which is we'll meet, founders of early stage CPGs. We'll sample products kind of communally. Mm-hmm. We have people all over the country, but we make it easy for people to find the products, these brands that we're looking to kind of present to the group. And then we collect all the investor materials, make it really easy to access those. We oftentimes record our initial calls with founders so that our members can get a little bit of background before they're coming into these Zoom presentations where the founders are actually presenting to our members. And then we make it really easy to just streamline the whole investment process, where when somebody decides that they'd like to invest, it's really easy to fund their commitments.
And in terms of the size of the companies you're investing in, it's typically, at least I would assume, those that are pre-seed to a couple million in. But you also make investments in larger companies?
Yes.
Is that right? Yeah.
Yeah, it's a new development. So we've really built our name and kind of sticking our head out there and investing at the earliest stages of these CPG brands, right? So if we've made, I think it was about 35 investments to date, 90% of them have been when these brands were sub $1 million in revenue. That includes Poppi, Bachan's, Goodles, Bubble Skincare, most of the brands we've invested in. But what we found is, and we call those our signature deals. That's what we kind of built our name on. And then what we found is that this was just recently, this was the beginning of 2025, where our members had an appetite to diversify and look at some more mature growth stage CPG. So these could be brands who are doing 10 million plus in revenue. And that really kicked off with like Garage Beer. We had worked our butt off to find our way into an allocation in that brand, which was not marketed really anywhere else.
And just for context, I think some founders who don't drink alcohol or are not really paying attention to the Kelseys, they might not know what Garage Beer is, but it is perhaps the fastest growing beer brand in America.
Yeah, it's got to be up there. So it's founded by a gentleman named Andy Sauer, or I guess you could say it's purchased very early on by Andy. He's in Columbus, Ohio, and he kind of reskinned the brand and built it into what it is today. And then Jason Kelce and Travis Kelce came along and
The NFL
became partners.
The famous NFL
both
players.
NFL legends. Yeah. And then, and it's in the light beer segment that was appealing to us. It wasn't craft beer. It wasn't something niche. It was something right down the middle of the plate that I think most Americans could look at. Great trademark, Garage Beer. I love the premise of that name, and simple, approachable, light beer. But yeah, that brand was, growing quickly and a little bit outside of the profile of brands we would typically invest in. So we said, let's bring that to the group. And our group showed out in a big way to get involved and invest in that company. And that really opened our eyes to doing now what we call top shelf deals, which is, finding really, really unique access into these high growth brands that we can bring to our group. Different risk reward profile than the early stage deals, right? You're going to hold those investments for a shorter period of time. Those early stage brands, you're going to hold that like 5 to 10 years, that investment. And there you're hoping for, maybe 15x, 20x, 40x, 50x type of returns. The top shelf deals, you're going to hold those investments maybe 2-3 years, but different upside, potential, maybe 3x, 4x, 5x. Those companies a little bit more secure, kind of sustainable place.
You must see a ton of deals because especially, as I mentioned, there are so many new brands that come to market. And every single day, every single trade show we go to, someone's always like, actually dozens of people are always like, hey, Ray, do you know any investors? And they're specifically looking for angel investors or seed round investors. And I imagine you're looking at hundreds, if not thousands of deals every year, or at least presented those deals. How many do you look at a year and how many do you actually invest in?
Yeah, so my partner Chris Robb and I, alongside Maddie Serviente, who's our director of investments, and then our partner Jared Cohen at Supernatural Ventures, between the four of us, and we look at almost all deals together, we'll probably see 1,000, in terms of a cursory review. And then we'll end up, talking to, in a more formal way, sampling products, getting on calls with founders, with maybe 200, 300 founders a year, just to kind of feel out what they're doing. And then we'll formally syndicate for the angel group. We'll formally syndicate, maybe 8 to 10 deals a year. Last year we did 11. So it's a real paring down process, and a lot of boxes showing up at the doorstep at the house and sampling a lot of products. But we really look for brands that are going to, have just outsized kind of growth potential and, products that really resonate. But no, you said it. It's like, we've needed, and I'm happy to see there are other syndicates popping up, that are focused on CPG, that bring angel investors together. Because you can imagine if you're a founder and after your friends and family come in and you got the institutional investors who are, waiting till, you cross the threshold of 2-3 million in revenue, you got to go collect angels. And so to have some focus groups where people are really passionate about CPG, most of our group is industry people who work inside the industry, but we also have casuals, people who are in other sectors and who've invested in real estate or the stock market or tech and want some exposure in CPG, or want to maybe just see the food system change and they want to put their money to work here. So I'm happy to see more and more angels getting organized to help these early stage founders out.
Growth potential, certainly important. Scaling potential, very important. Are there any other through lines among the brands that you've looked at and said, hey, this could be a winner? Is it packaging? Is it taste? Is it ingredients? Is it some sort of novel formulation?
Yeah, it could be any one of those things. My eyes perked up when you said novel. We're looking for something that, I remember, I think it was CJ from Goat Rodeo, who's been on your programs before.
Of course.
He said something once that was really interesting. I thought was really compelling. He said, we like things that sit at the intersection of things that are, I think it was interesting and obvious.
Yes.
Yeah.
That was such a great line.
Yeah.
I'm glad you remember that.
And obvious makes me think of when somebody sees it in a Costco or Walmart or Target, it's intuitively kind of understood, or it's like, oh, this feels like it should have always been here. But interesting is, to me, like what makes something novel. You take something like a Goodles. Goodles is familiar. It's approachable. It's intuitive. You see a fork full of mac and cheese on great branding, great packaging. It's right there. But what's novel about it is, hey, why don't we take something like this and fortify it, with real nutritional ingredients, our nourishing ingredients. And so things like that, or cool, novel snack products that just present unique sensory or form factor experiences, things that are memorable. There's a lot of products that we try every year that you put them in your fridge, you put them in your pantry, or in my family's fridges and pantries, we see these products around a lot. And, you check in with people, you say, what'd you think of that? And, some people just forget that you even gave them the product, or there's still a case of it sitting in there. But for the products that people really find interesting, they text you about, or they follow up, or they go and they order more. That's a really strong signal. So much of what we look for is, I think, just are people, when we get these, are we actually wanting to consume them? Do we remember it? Do we start looking for it week after week from that point on? That's probably the most provocative through line for us.
I'm going to ask you as an exercise to put these words in order of importance.
Mm-hmm.
So I think I have a feeling of where you're going to go, especially as an early stage investor, but let's do it anyway. Founder, COGS, velocity, price point.
So I'm going to go founder 1, and I'm going to go velocity 2, COGS 3, price point 4.
Yeah, I figured it would be that order. But every time I talk to an investor, founder seems to be of the utmost importance.
Yeah.
Can I trust this person to scale this brand? Do I trust their vision? Do I trust their ability to execute upon their vision? I'm a generally trustworthy person. I've met enough founders to know perhaps which ones are going to struggle in certain aspects of the industry and which ones are going to do well. But you never know.
Yeah.
I mean, it's such a flip a coin, when it comes to this industry in terms of who's going to do well and who, might fall by the wayside.
Yeah. I think the attributes we look for most in founders, and maybe it's not even that we look for, it's just when they present themselves, it's, we start to lean in more. One is just personality, right? Somebody who's looking to make friends, looking to make connections, open themselves up, is willing to be vulnerable, is willing to admit what they don't know, just pleasant to be around. It's hard you could see a business you really like and a founder who actually has a lot of the qualities you'd look for, right? In terms of just, maybe knowing the space, having a network built out, having done this before, but if they're a real asshole or, they feel transactional, even though you might believe in this thing and to some degree, it's hard to really want to line up behind them versus a founder who is just really committed to the business, is somebody that you start to befriend and really like and want to root for and want to see succeed. I'm happy to get behind those people and try to fill in the gaps wherever their skill set might be lacking. And that's the unique thing too about the group, right? Is we've got 275 people who have a lot of reach and influence in the industry, a lot of capabilities. We don't have to have, a perfectly cut founder to get behind. I think as long as they're willing to run through a brick wall and learn on the fly and hustle every day, I think we can work with that.
A lot of people admire Allison and Stephen Ellsworth from Poppi. They have been in the business, well, I guess since they exited last year. They're still involved with the brand on a sort of promotional level, I think. At least Allison is. We met them in 2016 when they were on stage at BevNet Live, and they won our competition, our new beverage showdown competition, as the founders of a company called Mother Beverage, and it was a sort of drinking vinegar-based brand. Obviously, they pivoted to Poppi and Better For You soda in 2020, and the rest is history. But when they were on stage, there was something really impressive about the way they presented and the way that they positioned the potential for their brand. I mean, let's be honest. Drinking vinegar doesn't really sound like something that's going to scale very well, become a mainstream brand. It's not like the other brands on stage were terrible. I mean, but they convinced people. They convinced people as to why this is going to work. And that, to me, is a huge and probably the most important job of the entrepreneur, is to get people to buy into whatever it is that you're selling.
Yeah. Well, it's funny because if I would have seen Mother Beverage in that pack format in the way that, I think the product description was written at that time and the way that they were really positioning the beverage, despite how great Stephen and Allison are, I don't think I would have made the leap.
We need to go back and have you watch that because it really was impressive. I mean, I'll look back at some of the brands that participated, and it wasn't like they were, shrubs. It was like our schlubs. What's the word? Schlub? Schlub.
Yeah, schlubs.
Schlubs.
Yeah, shrubs in a beverage type. But.
Exactly. But I would love to go back and watch a lot of the brands, or at least the founders who have won the competition in the past. But that one always stands out to me for some reason.
Yeah. Well, they're really driven. Interesting story behind that and how we got involved is it was 2019 or so. So this is post Cavu coming in and then working closely with Allison and Stephen to rename it, right, to Poppi, to move to the 12-ounce cans and the new packaging, the bright, bold packaging.
And Cavu, just for context here, Cavu is a venture capital firm that was co-founded by Rohan Oza. Rohan Oza, famous for vitamin water, for Bai at that time, now famous for Poppi, but also famous for Shark Tank. And so when Allison and Stephen went on Shark Tank and presented Mother Beverage, Rohan invested in the brand, and then Cavu subsequently invested, or maybe it was just Rohan.
Yeah, I can't remember the exact order of events, but that you're right to clarify that. And when we had met them, they did Reskinned, and they were starting to bubble up on the scene and kind of make more headlines. But I mean, it was still, they were only doing about $1 million in revenue. So interesting way that we got into that was one of our members, Spencer Slane, had taken a liking to Poppi, and he had started ordering cases to his home from Amazon, and they had just launched on Amazon and were moving an unusual amount of volume on that platform. And to be honest, I hadn't really seen much of Poppi out in the market yet. They were just pushing out into stores, same with Olipop. And he had loved it and kind of had been nudging me to see if we could find a way in to invest. So he emails Stephen cold. And Stephen was kind enough to get back to him, I think, after Spencer had pestered him enough, and basically said, we're raising, but it's really reserved for like celebrities and influencers.
Isn't that weird? It's the complete opposite of what you might expect. Usually it's the entrepreneur who's bugging the investor, not the other way around.
Right. But these brands, they start to catch fire and the tables turn a little bit. And so basically we had to audition to Stephen, and we being this small angel group, members and I. And I mean, to the point where we had written our bios, Spencer, myself, Mark Gallo, who many of you here know, and many of your listeners.
Man.
And I think maybe Mark was our ace in the hole because, NorCal and, Poppi was scaling. And
Mark was so NorCal was a big co-manufacturer in Southern California. They also had an operation in Northern California, obviously, NorCal. But Mark was their head of operations, or one of their key operation guys, and extremely knowledgeable about the beverage industry. So I can imagine that was very attractive to Poppi.
Yeah. So none of the rest of us would really qualify as celebrities or influencers, but thankfully we had Mark. But no, we got on a call with Stephen and Allison. They told us what they were planning to build. We didn't take much convincing. The brand was doing really well, and we jumped in. And we witnessed over the next 5 years kind of what everybody else witnessed. For our part, we just tried to champion the brand wherever we went. You could see where they were making real progress. They were pushing their in-store presence. They were getting case stack displays. They were moving to multi-packs. And it just, you just saw the thing start to really take off. And then you had, things really hit a tipping point with that first Super Bowl ad.
Yep.
That was a pinch me moment for a lot of us. And I'm sure many of the other early investors in that brand. But yeah, it's amazing to see what happened with that company, especially with it being one of the first deals we did through the group.
So it sounds like, going back to the question of what's the order of importance of the terms I mentioned, in this case, it was velocity, because they were doing so well. And you were like, okay, wow, if this brand is doing this well this year, what's next year look like?
We believed in the category.
Okay.
So CSDs had been flat or declining. And you had some OGs like Jones and like Hansen, like those brands weren't really creating new momentum and new growth. They were better for you.
Were they better for you though?
I mean, relatively speaking,
sure.
to Coke
Okay,
and Pepsi.
fair enough. Yeah.
And there's another one. I can't picture, had the bird on it. I can't remember the name of that one. But so there's these brands that were out there, but Olipop and Poppi were bringing new energy. They were clearly kind of leading the category to a new direction. So for us, it was really, we had belief in the category. And then, in terms of how big it could go. And then, there was a lot of noise in the industry at that time around apple cider vinegar, but I think more accurately around gut health. There was the bright, bold packaging. It just felt like the right brand at the right time, a lot of momentum. And, it was real. Like when you looked under the hood, there was actual real velocity there. There was real discovery happening, real trial, real replenishment. And, there's a lot of brands that you see out there that have a high profile. They get a lot of distribution. But when you really start to look into the different corners of where they're selling, it feels like it's more push than pull. Poppi felt like pull the whole time. There was a lot of push too, but there was real pull behind the brand.
If you had had the opportunity to invest in Olipop at the time, would you have?
I think we've had to run that by Stephen and Allison. So yes, I would have if it would have been kosher to do so, but I'm not sure that it would have been.
I guess what I'm asking is, and I have the utmost respect for both brands and both sets of founders. I wonder, if an angel investor or any investor is presented with two brands that are both doing well, that both have similar velocities and excitement surrounding their brands, which one gets the nudge? Where's the X factor?
Yeah. Well, in that case, I would have chosen Poppi if I had to choose between the two, because Poppi at the time was the only one that was shelf stable. So now we've got unique merchandising versatility, right? So we can be in the cooler and we can be off shelf, right? We can be in ambient. We can get those case stack displays that Olipop couldn't. Plus, one unique thing that I liked about Poppi was that they weren't trying to mimic or replicate traditional soda flavors like a Sprite or like a Coke or like a root beer. Not initially. They really pushed out with fruit flavors first. And I felt that it was a really smart play because you didn't have to have consumers kind of comparing apples to apples. So yeah, I felt a lot of conviction behind Poppi. And uniquely enough, actually, I mentioned top shelf deals earlier. We actually were able to get into Olipop for some of our members a little bit further down the line. But it'd be great if you're an investor and you believe in, let's say, the gummy category. There could be multiple brands that win. If you're angel investing in the earliest stages, high failure rate, maybe 3-4 brands make it and the rest of the 2 or 3 dozen or so don't. It'd be great to have exposure into multiple brands in the same category. Same thing with the whole protein craze, and protein ice cream and such.
I mean, this is an easy segue because I just got your newsletter, which was sent out on January 30th, and it lists some of your recent investments. And one of them is a brand called Nowadays, and it's a THC cocktail brand. At least this is for the Angel Group. I don't know if you're personally invested in the brand, but man, I can't tell you how many THC drinks we've seen come into the office over the past year. Hundreds.
Yeah.
Hundreds. And I'm like, what? Who's going to come out of this? Because clearly, most of them are going to fail. I'm guessing there's going to be literally 5 that maybe make it to the next year. And the Angel Group has invested in Nowadays. So what is it about a brand like that you say, okay, well, now we're going to pull the needle out of the haystack and pick the right one here? I mean, how do you define potential for a brand like that?
We came in a little bit later Nowadays relative to when we invest in most brands. But what stood out there was that I think they had a real handle on just this moving target around regulation, how brands are able to move into, I think, a safe zone while we wait for clarity on how this category is going to mature and develop. So I think that's one thing you got to look for if you're investing in this space, is that you trust leadership and their ability to navigate how these products are going to get to market, how they're going to legally sell these products to consumers. But, formulation integrity, so product and ingredient integrity is also really important. You need products that are safe and that are consistent and reliable for consumers to use. So I think they checked a lot of those boxes. And, they had kind of, I think like Poppi and like Olipop, they had just kind of shown that they were going to be kind of a breakaway threat in this category. So naturally, that gives you a lot of conviction. But we also invested in a super early stage brand in this space called Shift Naturals. Very interesting company in the West Coast, very, very early on, but has a unique way of going about formulating their products. They do all low-dose beverages. So they've got, an ability to get into almost every state that allows THC products to be sold. And so really smart founder, really interesting company to keep your eye on.
In the same way that you thought Better For You soda could supplant legacy brands, do you see THC beverages, or describing themselves as cocktails, do you see them supplanting alcohol-based beverages? Or do you see these products just bringing new consumers into the fold and just expanding use of THC?
I think it's going to do both. I think we still have, a lot of people writing on maybe beer or maybe more broadly BevAlc's downfall, or, everything's been downgraded, right, on the outlook for beer and alcohol sales. And I think it's real, but I think it's going to take a while before it's, it would be a sector that we wouldn't invest in. I think we still have generations of folks who, like to consume their beer. Mm-hmm. And, one of the reasons why we wanted to get involved with Garage Beer is we believe in that sector. We believe in that brand. But certainly things have changed. And I think it's a really exciting development. I think people have grown tired of the price they pay for going out and having, a night of boozing. I remember when, the hard kombucha products came out. Mm-hmm. And I was so ready. I was in my mid 30s, maybe late 30s. Kids were on the way. I was so ready to give up the hangover, but I couldn't get past the taste profile, It wasn't worth it. There was still too much of a trade-off. And, I would drink those products, 2-3 of them, trying to catch a buzz. The efficacy wasn't always there. And for some reason, I still felt a hangover in the morning. These THC products, I think, can really change the game.
You drink alcohol anymore?
Yeah. Modelo, Garage Beer, those are my go-tos. I drink a little tequila, less so with kids. Mm-hmm. But it used to be a pastime. I would go out on a Friday night, go down to the bar, kind of decompress, have a Modelo, and shot of tequila, and just kind of wind down that way. So still like my alcohol.
Yeah, I think all the downgrading of alcohol, or the concerns about Gen Z and their consumption of beverage alcohol, I wonder, as kids get older, as they start to get into those moments where they're done with work and they have kids and just need a moment to decompress a little bit. It could be that they're using THC products or smoking weed or doing whatever. But I feel like the use case and opportunity for Gen Z just isn't there as much as, it had been for us when we were in college, and that was the thing to do. Now, certainly there are other things that, younger folks can do, but I just feel like the use case and the day part use might be a little bit further down the line.
Yeah. What goes around comes around. It seems to be cool. I hope it's not the case, but it seems to be cool for kids to pick up a pack of smokes and smoke casually on the weekends or at a party. I've seen that.
Oh, yeah?
Yeah. I've seen this kind of, celebration of cigarette culture, of cigarette brands, of, 80s muscle cars and, 80s, 90s, everything that are around 80s and 90s seems to be kind of coming back again, even our vices. And so, I don't know. We'll see. But maybe that's just what I'm seeing in Toledo, Ohio.
Cigarettes, huh? Wow.
Yeah.
I never thought we'd see those come back to the United States. Like, I remember those days when you go into a bar. Can you believe that? You used to be able to smoke in bars. You used to be able to smoke on freaking planes.
Yeah. My dad was a bartender for much of my childhood, loud, smoky, late night bar. He would be bartending. It's like a scene out of Cocktail. He'd be flipping bottles and people ashing cigarettes left and right. And so I grew up in that environment. And I think we're in a better place now.
I would say so.
Yeah.
I would say so. We're also in a better place when it comes to options for legacy product categories, whether it be condiments or yogurt or French fries. And I'm mentioning 3 product categories that you guys are invested in via some amazing brands, AO, Jesse and Ben's, Painterland Sisters. I love Painterland Sisters. What a fantastic brand. When did you guys invest in that company?
Pretty early on. So this was 2000. What year are we in, right? We're in 2026. I think
As we're reminiscing on days past and years past.
It's, I think it was 2024. It was 2 expos ago. We had met Haley and Stephanie by chance walking in the North Hall, 10 by 10 booth, humble little booth there where they were slinging yogurt, and I'd never heard of the company before. And out of the corner of my eye, I see their brother, and I don't know if it was Wranglers or Levi's, and a big old belt buckle, and I think a flannel shirt, manning the booth. And it just looked a little out of the ordinary to me. And I just moseyed over there, I think right past Haley and Stephanie, who were out in the aisles, as they always are, kind of greeting showgoers. It just looked like something that reminded me of home a little bit. A lot of my family kind of involved in rural life. And so it stood out like a sore thumb at Expo West. And Painterland Sisters, female-founded yogurt from kind of middle of nowhere, Pennsylvania, 4th generation dairy farm, and tried the product, which is a skyr yogurt, 100% full fat, full cream yogurt.
Definitely a thicker consistency than you might be used to with yogurt, for sure.
Yep, organic. And they were just, so it was kind of checking all these boxes of what we're looking for, kind of coming behind, I'll call it maybe the Maha movement, right? It was just kind of getting back to simple food, and the product really impressed. And then I think what we saw a lot of potential, and it was just bringing this kind of female energy and female voice into a category that had really lacked it, that a lot of women shop in the yogurt set. And, quietly they were doing $4 million in sales their first year. And most venture funds would typically be hopping all over that, but they were largely undiscovered because, they'd kind of crossed that threshold to where venture funds would typically get involved, and they're in a massive category. I don't know if you can find too many categories that are much larger to build into, invest into than yogurt. High unit buy rate, high repeat rate. And they've grown tremendously. So they were, largely self-funded. They did a crowdfunding round, and we had met them at the right time. They were at my first call after Expo West. I think I even emailed on the plane ride back, said, hey, I want to connect as soon as we all get back from Expo. And we hopped on a call and made fast friends and, raised a pretty good amount of money, almost $1 million through our angel syndicate. And we've been working with them closely ever since. And very proud of what they've been able to accomplish so far.
How many brands do you meet at Expo or how many brands have you met at Expo that you've invested in?
I don't know. I'd have to think about it. It's probably 4 or 5.
So not a ton.
Not a ton. We discover a lot of, I think, worthwhile brands to look into and kind of keep our eyes on, and then they might, actually materialize into an investment. But, like I said, we're only going to invest in maybe 8, 9 brands a year. In the early days, we were only investing in maybe 5 or 6 brands a year. But you mentioned the condiments category, another brand that my partner at the Angel Group, Chris Robb, and a couple of other members invested in is Bachan. So that transacted, news broke today.
$400 million acquisition. Amazing job by Justin Gill and his team. What a fantastic brand.
Yeah.
Yeah.
My partner Chris has obviously been very bullish on the condiment set. We saw, Truff came in and broke new, Bachan's actually broke new ground on where we could go with pricing, premium price condiments. We saw Truff do that for a bit. And, so AO comes along in the mayonnaise category, and I think breaks new ground with, not only premium positioning, but that kind of culinary angle that David McCormick and Molly Baz kind of conjured up together using her credibility. Really, really unique product, in terms of there's real inclusions, real cut up pickles and the dill pickle mayo that they use, real mustard seed in their mustard mayo. And then, Yeah, you look at the frozen potato category with Jesse and Ben's, another brand that we got behind very early on. Large, massive category, shopped every week by consumers with very little innovation. And the category there is largely concentrated within a handful of players that weren't really innovating, and comes along at the right time with the whole seed oil movement. And we were kind of taking bets internally about whether or not the avocado oil SKUs, because they fry their fries in avocado oil, and then they also have SKUs that are fried in
Beef tallow.
Beef tallow.
Yeah.
And my wife actually called it right. I was betting on avocado because at the time, avocado oil is everything, but it's actually trending more toward beef tallow. But, Jesse's got his finger on the pulse of what the market's looking for. Now they're, I think the fastest growing brand in the natural channel in the frozen potato aisle. Really, really incredible what they've been able to build there. But that's, look at our second generation of brands is A.O. Mayo, Painterland Sisters, Coyotes Tortillas, Stone and Skillet, Bowie, the Agua Frescas brand, Jesse and Ben's.
Yeah.
They're showing a lot of promise, just like the first generation of brands did.
These are all fabulous brands you mentioned. I will say, and I love Jesse and Ben's. I love their positioning. Their packaging is fantastic. The fact that they are using different oils or bases to fry their potatoes, I think is really differentiated and interesting. But I would be wary of investing in a commodity category like fried potatoes or frozen potatoes. I feel like if you think about, the private label business, the major companies out there like a McCain's or an Ore-Ida, all they have to do is create their own version of a Jesse and Ben's, and what's going to stop them from doing that? So what made you feel like they were so differentiated that the big players, the big commodity players, couldn't come in and just take their space?
Great question. So we took a lot of time doing store visits when we had met Jesse just a couple years ago and looking at what consumers were being offered in the space. Forget natural, but when you would go into a Kroger, a Publix, Safeway, all the brands were the same. And you flip over the ingredient panel, and there was always some sort of, kind of black eye, ingredient in every single one of them. It should be very simple ingredients. I think this thing that these large brands struggle to do is anticipate, I think they can see the trends coming, right? I'd be surprised if they didn't know that there's a clean label movement sweeping across every category in grocery. And eventually it makes its way into the mass market conventional retailers where those consumers are looking for it. Mm-hmm. It used to be the left and right coast consumers that were really the consumer bases that were looking for these products. And then eventually it would kind of make its way into the middle of the country. And I think what we see now is a lot of the consumers in the middle of the country, and maybe even in more, the Kansas Cities, the San Antonios, the Clevelands, the Nashvilles, the Atlanta, Georgias. These are the markets that I think are now kind of creating trends and getting back to like red meat, getting back to dairy, getting back to meat and potatoes.
Yeah.
There was going to be a movement back toward like family-friendly offerings, family-friendly categories like frozen meals, frozen entrees, frozen potatoes. So we saw that. The movement away from seed oils is happening. The large brands, I think, struggle to either act and innovate on time, or they're happy to just wait and see what shakes out and either, go in, like you said, with one of their own brands and kind of buy up facings and kind of squeeze them off shelf or, litigate them into oblivion, as we've seen happen with one of our other investments. The other thing I think they struggle is to really put out brands that consumers respond to. And I think that's like a deft touch. It's not easy to build like in a corporate marketing environment, a Goodles, a Jesse and Ben's, those types of brands, I think just need a founder's touch, to kind of to put out into the market.
I just sat down with Gabby Lewis, who's one of the co-founders of Magic Spoon, which is a brand that I never thought in a million years would be where it is today, because I never thought anyone would buy a $10 box of cereal. Geez, I was proven wrong. But Magic Spoon is another one of those brands where, they've succeeded in a commodity category by offering something different, by really focusing on macros, focusing on premium ingredients and flavors. And then recently, what was it? Just a few months ago, I was in a Stop and Shop, which is a grocery chain up here in Boston. And I had seen this terrible knockoff of Magic Spoon. And I saw that it was created by one of the big cereal companies, one of the big food manufacturers. And I'm like, So I guess it's not as easy, to your point, of some of these big players being able to create something on their own. Yes, they can come in with their own product after the fact, but how much of that matters once that brand has established itself as the preeminent offering within that particular category? Jesse and Ben's, I hope it gets there. I really do. I think their product is amazing. Their branding is fantastic. The beef tallow thing is pretty interesting to me. I wonder, I'm also kind of on the fence about whether that can become as mainstream as it might be in some pockets of the country, but it is interesting for sure.
Yeah. There's the brand that if it can get to the point where they are, where Jesse is, where he's now crossing over into more conventional retailers, I think that's where you start to really see, what a brand's kind of makeup is in terms of how they navigate that growth, how they play a new game, kind of working with conventional retailers. And there's a different playbook that's in store for that. So a lot of this comes down to, building the capabilities of the team as kind of new opportunities demand, and thinking about, how you might right-size your product offering, how you might right-size your price pack architecture, your value proposition in general. So, you got to give an opportunity for these brands to evolve, because what you see today might not be exactly what you see in a year or two as they start to push into larger retailers.
So I just want to see a 2-pound bag of Jesse and Ben's as opposed to the smaller pouch bag. Then I'll be really happy, actually.
Yeah.
I imagine you're talking to the founders of the companies you're invested in on a relatively regular basis. So let's go back to Jesse and Ben's. How involved are you in advising the brand as it continues to grow and scale? Do you feel like you like to have a hands-on approach? I know you're not getting involved on a day-by-day kind of basis, but do you like to be intimately involved in how they're thinking about retail strategy or, innovation?
Yeah. Some of the brands that we get involved in, whether it be through the Angel Group or through Supernatural Ventures, our investment fund, I think in general, we like to be, within arm's reach of these founders at any time, like most investors would be. But I think what's unique about what we have is, we've got this committed pool of capital through Supernatural Ventures. We have a unique obligation to our LPs and to ourselves and to the founders to stay very close to those businesses. So we're typically at minimum on, monthly calls where we can stay close, understand whatever kind of challenges they might be facing or opportunities are around the corner, or we can tee up unique sponsorship opportunities or promotional opportunities that we might have to bring to our portfolio companies. Obviously, we've got a lot of connectivity in the industry, retailers, distributors, where we can be helpful in making connections. For the group and for our members there, our angel investors there, we do biannual calls with our founders that we invest in. So we've started to make those much more scheduled so that we can stay connected to those founders. They can take advantage of this large network of folks that we have in the group who can really be helpful. But yeah, I think a lot of it just comes down to, founders keeping investors up to date, keeping those investor newsletters going out, making sure you're very clear in what you're asking for, what opportunities you're facing. But I think like anybody else, we like to stay close to our founders. Some were a little bit more, like Goodles, Poppi, we were just happy to have the opportunity to invest. They had great teams around them. Siete, those brands were going places, and we just tried to champion them every step of the way and, try to be good stewards and investors.
I'm sure it helps validate you and the Angel Group in the eyes of founders who are operating very fast-growing businesses when you have exited from a Siete, from a Poppi, are currently involved in Goodles, have exited from a Bachan's. But I think the vetting process at this point is very much now, brands are very much coming to you as much as anything. Or am I wrong? Now that you have Supernatural Ventures, is it still very much, hey, we're looking at opportunities for brands that are doing well and that we might have a chance to invest in them? Or are most folks coming to you at this point?
Yeah, well, we benefit from a lot of inbound. So, through the group, we've got 275 members. That's 275 tentacles out into the industry. Mm-hmm. So we kind of all share in deal flow together. And the Angel Group benefits from that. Supernatural Ventures benefits from that. But I think, for the most part, deals are going to come from our members. Goodles came in from a friend, Gil Ayal, in the group. Spencer, found Poppi. So there's always a different source. But I think more and more, we're seeing brands that we want to get involved with, whether it be through Instagram, somebody posting something we might see from you guys, reading in an article. What's great, though, is I think we do have, some credibility in the space. People want to work with us. I think it's a place where brands, when they do raise with us or through the fund Supernatural, that it establishes some momentum for them. So I think we all see kind of mutual value. And once we find something that we like, I think as long as the terms are right and the timing is right, we can typically make something happen.
Speaking of brands that you brought to the table here, we have a couple that you brought with you all the way from Ohio. So thank you so much for that.
Yeah.
The first brand is a brand called El Nacho, which we're familiar with here at BevNet. They're a Boston-based brand of premium tortilla chips, which are fantastic. What interests you about what these guys are doing?
I love the category, large established category that most consumers buy in, week to week or month to month. And you look at the packaging, and for anybody who's listening, you just look it up online, El Nacho, and it's kind of like that reach out and grab you type of, packaging and bright colors. You got the
luchador type of.
The luchador, characters.
Yeah.
Interesting flavors, right? So we've got the health badge with, made with avocado oil. You've got, unique flavors with a hot honey mango tortilla chip. You got a chili lime. So it kind of goes from just a tortilla chip to a little bit more in that direction of maybe like a better for you Doritos. But I think with flavors that are a little bit more unique, novel, a little bit more imaginative for a newer generation of consumers. Plus, they make a great, just standard corn tortilla chip that is, I think is as good as it gets out there in the market. So, brand, product, shelf visibility, solid operators come from the restaurant industry, food service industry, and self-manufacture. There's real craft behind these products.
I haven't seen their social media. I imagine these things really pop on Instagram. How much does social media impact your evaluation of a brand?
I guess you could say when you see something that's kind of popping on social media, it's a real plus, but it's certainly not a necessity. There's a lot of brands that have scaled and kind of gotten to the finish line, actually gotten to pretty large exits without having, a material following online. But certainly helps. I mean, it could be a real advantage, a real ace card if a brand's got a following. I think this is a brand that could do that. Mm-hmm. And, they've got a newsletter that's pretty cool. I think as they start to develop the brand more and more, it's got that type of potential.
Are you on TikTok?
I used to be. I just deleted it. It just wasn't healthy. I had a unhealthy relationship with TikTok.
It is hard. I've spent maybe 5 minutes on TikTok. I've never really been a TikTok guy. But Instagram, I spend probably too much time on. It's just so addictive when you're scrolling through videos and you just see these quick videos over and over and over. And the algorithm has gotten so good that they just know what's going to be interesting to you.
Yeah.
In kind of a scary way, but that's for another podcast.
No, I'm with you. Yeah. Anything where I can just be centered around our fascination with food is good for me. And TikTok was taking me all kinds of different rabbit holes I didn't need to be going down. So I've limited my social media here as of late.
Well done. Now, this brand I have never seen before, which is called Wild Monkey Bar. The candy bar reimagined is the tagline. Let's take a look at this.
Yeah.
Okay. Wow. Okay. So no one needs to hear me say this again, but I'll say it again. I am a Snickers fiend. Love Snickers. Will eat Snickers probably till the day I die. And hopefully it's not the reason why I die. But this looks really cool and it feels Snickers-ish.
That's a great compliment because I think the way we're looking at it, and this is just a brand that we're kind of, becoming friendly with, two co-founders out of Boulder, Colorado, husband and wife team. I think really wanted to design something that was more like a real confection, like candy bar product that happens to hit like a nutrition bar. So you look at some of the ingredients here, you've got organic cashew butter, organic pumpkin seeds, sunflower seeds, pecans, organic oats. So there's a layer of granola in here. So it eats like a candy bar, but you don't have to feel nearly as guilty as when you're housing one of those Snickers bars.
You nailed it when you said it feels like a cross between a candy bar and a protein bar. Mm-hmm. When you look at it, it has that look. It's a white package with gold lettering, which feels reminiscent of one like a high-end protein bar. And also, like when you actually see the candy bar on the front of pack, you're like, okay, this looks really amazing and indulgent. It's also relatively high calorie. It's quite high calorie for a candy bar, 410 calories, and then 11 grams of protein per bar, which is great.
we look for brands where there's a really, really, even if a small sample size, encouraging kind of velocity story. So they're only sold in the Front Range of Colorado right now. I lived in Boulder for 8 years. It's its own bubble. You can walk into a couple stores, coffee shops out there, and if you were to sit there and watch, over the course of a day, not that anybody would do that, they're going to clock velocities that can range anywhere from 30 units a week to upwards of 200 units a week with these bars.
Yeah.
So that told us that there's a consumer for this and that there's real discovery and kind of fanaticism happening around this product. This is, I think, a nice contrast to what we've been seeing both in the confection category and in the kind of nutrition bar category, but really intentionally made very, very early on. The calorie count, I think, is probably something that you could look to address through unit size, maybe even pack format, right? You could go into something with, like a 2-pack, or you could go into like mini monkey bites, something a little bit more poppable, a little bit less of a calorie hit. But I think when you try this, I think you'll agree there's real potential here because it's not only, I think, a delicious product, there's also all these kind of cool sensory aspects too with the crunch and the creaminess of the product. So
yeah, very cool stuff. Well, thanks for bringing these. And I can definitely get a sense of how your own evaluation plays into products that end up on your desk. And, this happens every single day. And it feels like it's fun to be an angel investor, I'm sure. But I'm sure there's also times where it's like, I can't do everything for everyone and can't be everywhere for everybody.
yeah.
And this is one of the hardest parts of your job. But for folks who are considering investing in this space and putting a few $1,000s of their own money into a CPG company, or perhaps even joining the Angel Group at some point, what's some advice that you have for them? What would you recommend they do prior to making their first investment?
Yeah. So probably follow a similar journey that I did, which is one, don't go it alone. I was gun shy. I didn't want to pull the trigger, unless I had other smart people around me. Mm-hmm. And even if you're an experienced investor, it's always great to do it alongside other people who are just familiar with the industry. I would say that, you want to be an accredited investor, which means I think as an individual, you make $200,000 a year or more for consecutive years, or your household has generated $300,000 or more for consecutive years, or you have a net worth of $1 million or more. So you want to be an accredited investor. And and I think part of that is it's not a substitute for, real retirement planning and savings. It's high risk when you're investing at the earliest innings of these businesses. I think you need to come to grips early on with the realities of angel investing. Some of these investments are not going to materialize. They're going to go to zero. So if you only invest in 1 or 2 companies a year, you might look up in 3 or 4 years and see that, some of them or all of them have closed. They haven't made it to an exit, So I think it's important that you diversify. You invest in maybe 2-3 companies a year. And that way, when you get some that do actually reach an exit, the outcome can kind of more than dwarf, the checks that you wrote into the ones that didn't quite make it.
Yeah.
But I think you got to look at it as like ROI from more than just a couple, from just kind of a binary, outcome. If you enjoy the journey, if you enjoy getting behind founders and companies that are putting their all into a business that you like for one reason or another, you like the founders, you really like the product, you really want to see this category kind of get overturned with better for you products, and you want to champion it to your friends and family, feel like you're making a difference. If you work in the industry like many of our members do, you can actually mitigate some of the risk, right? Mm-hmm. You can make valuable introductions. You can lend your perspective or expertise behind the investments you've made, unlike putting your money in the stock market, a company that you can't touch, or tech or real estate. So you got to get in the game. And I would suggest doing it, where you can get curated deal flow, not a plug for the Angel Group exactly, but get, curated deal flow, do it alongside other folks who kind of have a little bit of experience. And, it feels different when you're going in as a group than you are when you're kind of going in alone.
I think that's excellent advice. I think there's a lot of people who want to support early stage brands and want not just to support them, but to eventually make some money off of concepts that they feel could go a long way, but they don't have the confidence and don't have the experience yet to do so. And I think just in that 3 minutes that you shared gives people a good foundation for where to start. So thank you so much for that, Adam. Adam, this is such an honor for me. I mean, I feel like I could be sitting down with you for the rest of the afternoon, but I know you have a lot going on and need to get back to Ohio. But thank you so much for coming out here. It really means a lot to me and the team, and really excited to share this conversation with your audience. Excited to hang out again at Expo West.
Yeah, and thanks for hosting my daughter and I and showing us around, Ray. This is something I think we'll always remember.
That brings us to the end of this episode of Taste Radio. Thank you so much for listening. Taste Radio is a production of BevNET.com Incorporated. Our audio engineer for Taste Radio is Joe Cratchy. Our technical director is Joshua Pratt, and our video editor is Ryan Galang. Our social marketing manager is Amanda Smerlinski, and our designer is Amanda Huang. Just a reminder, if you like what you hear on Taste Radio, please share the podcast with friends and colleagues. And of course, we would love it if you could review us on the Apple Podcasts app or your listening platform of choice. Check us out on Instagram. Our handle is BevNet Taste Radio. As always, for questions, comments, ideas for future podcasts, please send us an email to ask@tasteradio.com. On behalf of the entire Taste Radio team, thank you for listening, and we'll talk to you next time.